Hello and welcome to My Finance Teacher. Subscribe to the channel if you haven't. Give this video a like if you think it's interesting, entertaining, or maybe even just a little bit useful. We are looking at S&P 500 as I promised in my previous video. And what I think is happening in S&P 500 is it's finally entering an advancing phase of a new intermediate cycle. We've seen the previous cycle last for pretty long, about 8 months, since early February until late October. And generally these cycles last for about half a year, as we've seen in some of my previous videos. So the normal duration of these cycles and the fact that we have been in the current cycle for longer than a normal duration tells me that basically we are already due for some sort of a bounce, and we are due to start an advancing phase of a new cycle. And about 3-4 days ago we saw a gap on the S&P 500. We'll have to see in future if the gap is going to be filled or if it's going to be a breakaway gap. I think there is probably, I would say, 55-60% chance that this gap is not going to be filled within the next couple of months. And having seen that gap, as well as the break above this trend line, the one I mentioned in, again, one of my previous videos, what I've done is I've entered QQQ at about the price of around $171. Unfortunately, since then on Friday, QQQ declined somewhere close to just under $170, 169 as we see here, just above 169. But as I said, I do expect S&P 500 and of course QQQ to rise. There will be pullbacks on the way, especially I guess close to whenever S&P 500 reaches close to the recent high. There might be a significant pullback. I think that might happen near the second half of December, just after the Fed rate hike. At the moment, the rate hike, according to the futures, is not really set in stone. As you see, according to the markets, the probability of a hike is under 74%. Actually, a couple of days ago, it was around 69% or so, even just on Friday or Thursday, I think. So what it means is the Fed rate hike has not been completely priced in, and whenever that rate hike happens, there might be a pullback in S&P 500. But until we reach the resistance zone of the recent highs, I think S&P 500 is going to trend upwards. Another good news for the markets, for the stock market, is the jobs report that came out last Friday. This chart is done based on the data from the Bureau of Labor Statistics. So the recent jobs report said that there were 250,000 jobs created in October. As you see, it's a pretty good month compared to what we've had over the last several years, 3 years on this chart. And for that reason, for all those reasons together, I'm pretty bullish on the S&P 500, on the stock markets over the next, well, I would say intermediate term, over the next several months. I think there is a pretty good chance S&P 500 is going to test 3,000. This might be contrary to what a lot of analysts say about the stock markets getting ready to crash with the Fed finally starting to hike the rates. But I think it's a little bit early for a crash. Looking at the bigger picture, at the longer term cycles such as the 4-year cycles in the stock market, the current cycle has been going on since 2016, since early 2016, and I think we still have time within this normal duration of the current cycle to probably break to higher highs before we see a more significant decline near the end of this 4-year cycle, probably sometime in 2019, 2020. So that is my view on the stock markets. What do you guys think? Are we going to see S&P 500 close to 3,000 by, let's say, March next year or not? Let me know what you think in the comments below, and thank you for your attention.